Good evening, pirates. Is my voice clear?
Hello.
Yes, Brijesh.
Yeah, Sanjay, for me it is clear.
Okay, thank you. So let's start with our today's session. And it is about day one. And day one we have dedicated for revising or tuning the psychology. Okay, I'll just first go through the content which we have planned for this entire session. Yes. So this is 5 days revolutionary shadow trading workshop. It is not one day webinar, it is 5 days. It is like in 5 days we are going to cover some topics and we have dedicated specific days for each topic. DIY is like do it yourself. Come join an experience. This is basically whatever observations I have collected in last 5 years. I am going to share every observation with each one of you, and this observation might be familiar to you, or there can be some observations which are not yet noticed by many of the retail participants. So this session is basically designed to create an awareness in retail participations, how their sentiments are affecting the markets, or what is their role in Indian stock market, and what could be the important considerations if they want to succeed in Indian stock market. So day one we are going to conduct a topic which is tuning shadow psychology. What is tuning, what is shadow, and why we are talking about psychology in the first session. So it is like keeping aside all the old experiences in coming 5 days. From like if this session is for 1.5 hours every day, for this 1.5 hours we are going to keep our psychology or our understanding about the market. Whatever understanding we already have about the market, we are going to keep it aside for next 5 days, and whatever things I'm going to share with you, you are just going to focus on those points or focus on those that aspect of the market, and we are going to check whatever is being discussed in this session whether it is valid or not. So we are going to spend entire time in understanding the observations. If there are any queries, we can align these queries towards the end of the session. We are not referring to the skills which you already have. What I am going to share with you in today's session, we are only discussing about these observations. Okay, and by knowing these observations, definitely it is going to change your beliefs about the market. We are going to discuss some points where we might have some initial consideration about same topic, or there can be a difference in opinion, but whatever thing I'm going to share with you, we are just uh, observing, or we are considering these things are nothing but the facts of the market. Okay, on day two, what we are going to do, Shrikant is not able to hear anything. One moment. Please. Vedansh. Okay, he is rejoining again, not a problem. So day two, we are going to understand the, we have renamed it as an opportunity window. What is the role of this opportunity window? What we are going to discuss in this session? We are going to discuss everything about stocks. It is like equity market. How we can invest in any of the stocks, why we are going to select the number of stocks, what is the reason behind selection of the stock, how these stocks are going to help to grow our investment, what could be the criteria for the selection, what could be the criteria for entry, exit, everything we are going to discuss in day 2. And this will be more about the theoretical approach of handling stocks. Then we are going to visit a topic which is called as in the patience zone on day 3. This topic is aligned to understand the manipulations in index. What is the role of index manipulation in Indian stock market? Whether the market is actually manipulated or not. I'm going to share some evidence of the manipulations, and whatever uh, I'm going to share with you, it has some proofs. It is not my assumption. Every point which I'm going to put forward will have some base or will have some facts behind these points, and I'm going to share every fact or each and every minute detail about the claims which I'm going to make about the market. Then once we are aware of this manipulation, we will have an understanding about the trap, a well-known retailer's trap, how the retailers are trapped in Indian stock market. And if we are aware of the stocks, aware of the trap, we also will have, I'm going to share with you a key to unlock this trap. Okay, and by using this key we can stay away from this fear, greed and haste of the market. Then on day 4, what we are going to learn is we are going to connect all the dots where the stocks and index have some relation, and at which what is the importance of index if you are investing any of the stocks, how index is guiding us to select a stock when when we are in bull market or when we are in bear market, that we can understand using this relation between index and stock. And along with that, we are going to understand the different type of trading, a different type of uh, investments which we can do in stocks. It is like if you are scalper, if you are short term investor, if you are long term investor, if you are positional trader, all the activities which any trader can perform with respect to stocks, we are going to discuss that on day 4. On day 5, we are going to go further and we are going to practically implement some option strategies on index. So buying index, selling index, option selling, option buying, future selling, applying multi-leg strategies, all these things we are going to discuss on day 5. So the topic wise content is too huge. My challenge is to complete this topic within 1.5 hours per day. And for your side, yes, the recordings will also be shared with every one of you except day 5. Okay. So all these topics are aligned in a way where we get the complete 360-degree understanding about Indian stock market. It is like everything is connected to every other thing. And if I'm talking about stock, it has direct relation to index. If we are talking about index, it has some direct relation to some set of stocks. How this relation, how can we identify the right set of investment, right set of trading opportunities? Everything we are going to discuss in these sessions. Okay. And so every session will have some assignment. So those who are participating in the assignment, they also get some bonus at the end of the session. And along with that, there are some participants who are repeating this session or they're going to visit the recordings. So if you have any other queries, you can just contact me directly on my WhatsApp number. Okay. So all these 5 along with this 5 session, we have some templates, we have some set of rules. Everything I'm going to share. We have some screeners. Everything I'm going to share towards the end of the session, and it may take around week or two to get all the learning material after the session. Okay, but keep attending this session for continuously for 5 days, and it is definitely going to change your complete perspective towards the market. So today we are starting with day 1 session. So these sessions are conducted in such a way that we are not betting on anything, we are building something. And to build something, there are some observations are which are no or these observations are nothing but the notes of the efforts of previously spent. So when I spent the when I spent some amount in stock market with specific chart, so I have noted down all the observations, and all these observations are collected and refined or retested again and again for multiple years. It is like now it's been 5 years when I started sharing this observation. Initially no one believed these observations are valid or not, but I got some time and I got some proofs in the corona fall, so that I can prove my point. And after this corona fall, around 1200 plus participants have understood this content or have supported this content, and so that we could create such sessions for creating awareness about Indian stock market in retail participants. Okay, so this was not initially planned. These sessions were not initially planned. We had sessions on the weekends, and many participants are joining those sessions on the weekends. These are the advanced sessions. So somehow the participants who are interested in this topic but they are not aware of, or they do not have any clue, they ask us to create a overview session. And that's the reason, by shrinking the content of each weekend. So every weekend we are spending around 6 to 8 hours in this topic, and we have reduced this essence, or we have reduced this content, and we have highlighted and noted down some key points, and we have created these overview sessions, which we are going to understand in 1.5 hours. Okay, every day. So 5 weekends are shrunk into 5 days session, and that is how I am going to share everything with you. So please keep focus on this topic. Every topic is important, and every topic is aligned in such a way that it has some links to next topic. So do not miss any topic. And the language for the session will be, as I know, Marathi, Hindi and English, but the language we have kept is English. I need commitment from all of you. It is like there is difference between interest and commitment. When you are interested in something, you just participate when you have that thought, okay, I'll participate and go. But if you have commitment, you are going to spend good amount of time with this without any excuse. Okay, that's why you have paid rupees 199 for this session, and those who have paid rupees 199 for this session, they are definitely serious about this topic, and that is why these sessions are not kept for free. And so that we should not waste others time. Those who are in the session, they are always keen about what the amount they have spent to register this session. So stock market is like any other game. It has participants. Participants are the set of people, or is a group of people which consist of winners and losers. So in this, all the participants, there are some winners and there are some losers, and the winners are following some rules and losers are following some rules, and because of their rules they are becoming either winner or loser. There are also rewards and penalties. There are different winning methods. It is like few winning methods and multiple losing methods. There are some open secrets, there are some hidden secrets. So we are going to understand the stock market as a game. And in this game, like every other game, we should know the game first. before participating in the game, we should know the game. So there are some facts which I'm going to share with you before starting the session. So there should be one winner always. There should be many losers. If you are referring to any game except chess, so chess is like there are only two participants, or carom there are two participants in each game. But if we consider the set of participations, like if in any game the multiple teams are competing with each other, and there is always a one winner is chosen. So in stock market also the same rule applies, and there is always one winner, and we should know who is going to win this game. And once we know who is going to win this game, this skill in identifying who is going to win is going to help us to achieve our success. There are some open secrets. These are nothing but traps. There are some hidden secrets. When you know hidden secrets, you are going to get real rewards. Knowing the rule before playing any game is really important. So we are going to define some rules for us, and we are going to use some of the rules out of these defined rules. There can be millions of ways to fail in the game. So how can we explore this? It is like failing every time, or attempting, or giving an attempt can give us either win or a loss. If we are winning, we can note it down. So for this win, I have done this activity. If I have lost anything, then I will note it down in my notes. It is like, for after doing this, I have lost this trade, or I have made a loss in this investment. So the same way, if we are noting down all the failures and winning criterias, we are going to get millions of criterias, millions of ways using which we can fail in the market. And there are only few hundreds of ways by using which one can succeed in the market. Not every method suits everyone. It is like my winning method will be suitable only for me, but you will have a different winning method. It is like 70% you are using my skill, and 30% you might be using other skill. That other skill belongs to you. Out of this 30%, 20% can be your skill, 10% you have taken for some other trader. Like that. Not one method suits for all. So if I'm sharing any method, this method is not directly applicable to you. Why? Because we have difference in our mindsets. One should keep collecting reasons of win. Along with that, one should also keep collecting reasons of losing the game. One can restart this game anytime. It is like restarting a mindset or refreshing a mindset. That is what we are going to do today. We are going to unlearn something from today onwards, and we are going to learn new things. One can relearn the game anytime. One can create its own method. Once you are aware of all the rules, by using these rules, we can create our own way of winning this game. One can, if creating this method is difficult, then you can follow, copy, or partially copy others method. So when I failed miserably in my initial journey of stock market, so I am in stock market since 2009 till 2016, I have made a loss of around 22 lakhs. And from 2016 to 2018, I have put some time to define a method which suits my mind, and I could collect some information from the market by focusing every day. Like for 6 hours and 15 minutes, I have spent good amount of time with single chart bank nifty, and I've noted down all the observations. Then these observations have changed my result over the period. And whatever loss I had made, I could able to recover that loss. And even if you are watching me today in in Twitter or in my WhatsApp group, every day I'm sharing 51 plus points trade in my active trading group. So if I'm busy, so I will not post this. So since last 2 or 3 weeks, I have not posted anything because I was busy in some other activities. But if you go to Twitter, then you will find every day we are posting a trade in which we are catching at least 51 points. Sometimes it can be 150, sometimes it can be 200 points in one single trade. but these trades I am posting analysis live, and if I'm posting any analysis live, then I'm also taking trade based on this analysis, and I'm posting that trade also, execution details of this trade along with the time, just to get an overview how these trades are executed. Okay, so we can partially copy this method, or we can try to follow this method up to certain level. Then one can exit this game anytime. So it is not like you cannot come out of this trap. If you are stuck in any of the trade, if you are stuck in any of the investment, or if you are stuck with the stock market, and it is not like that you cannot close this entire activity, you can switch to any other skill. Instead of stock market, there are multiple other ways to earn, to make some money. So one can participate, one can practice method to win the game again and again. So once you identify 2 or 3 methods using which you are winning every time, if you are applying these rules, if you are applying this technique, you are winning every time. You can note down this, and you can use this every time to create some new wins. One can expedite the winning process by practice. So practice is the only key. Once you are aware of what works and what not, then we can start applying this again and again, and when practicing this, we can get some good results. One can master to a level where no one can beat him or her until the next master. So we can create a, a blueprint or something, or we can say we can create some one pager using which we can master this technique. It is like, it is beyond skills. So if you have practiced one of the method for more than 1,000 times, then it becomes a mastery. So you don't need any conscious involvement of your mind to execute the same thing on your next attempt, and subconsciously you can have that power, or you can execute this without any effort. So we can reach to that level also. So these are some facts, and we are going to test these facts in live market. So there, what kind of game we are talking about, what are the rules, everything I'm going to share with you. So stock market is majorly about two different set of sentiments. If we are referring to sentiments, it is a collection of millions of participants who are there in stock market today. Okay, the sentiments belongs to millions of participants, out of which we have our own sentiments. So I have differentiated both the sentiments, and if we are talking about sentiment, we are referring to stock market, and if we are talking about psychology, then we are referring to ourselves. So the sentiments, if we are bifurcating, whenever we are referring a term sentiments, we are talking about what is happening in stock market. Whenever we are talking about psychology, then we are talking about whatever is happening with our mind. So first we will talk about sentiments. So if I ask you, what are the different factors which affects the stocks, affects the index, or affects Indian stock market? So there are number of things. It is like supply or demand. If there is an huge demand and the supply is less, then the price keeps on increasing. If there is huge amount of supply and there is no demand, then the price gets reduced to certain level. Then there are some market indicators. There are some different indices, production indices, consumption indices, different indices are there. They are also used to create momentum in stock market. If war is happening, suppose there are any global events, positive or negative, these are also going to affect our Indian stock market. We have recently seen a Russia-Ukraine war and the effect of that war in Indian stock market. Also, there are some concerns over inflation, some new policies introduced by government. If there are any technological changes, like in auto sector, if we are switching from diesel and petrol engine to the electrical vehicle, then this is also going to affect the market sentiments. If there are any natural disasters or extreme weather conditions, those can also affect the stock market. government policies, new regulations. Like suppose we are we are talking about pharma sector, and if there are new if the FDA or whatever is not approved, or if there are any problems with the molecule which is defined by suppose these pharmaceutical companies, if there are any side effects in the drugs they have created, then there are some regulations. If the small change in regulation can affect the entire sector. It can be about pharma, it can be about energy sector, it can be about IT sector, it can be about anything. It is like if we are switching from dollar payments, the now we are some of the countries have also started accepting the payments in rupees. So this is also going to affect the Indian stock market. So out of this all the sentiments, do you really find all the sentiments are important to understand as an retail participant? As we all are retail participants, if we want to analyze the stock market, do we really need to study all the sentiments? So what is your opinion? Do you really find the sentiments, every sentiment is important? So after this topic, we are going to have some interactions. Like I'll be asking some questions to you, and you can respond these questions either by unmuting or by putting something in chat box. So if I'm asking you, there are different factors to drive this market. So are these all sentiments are really important, or there is something else? What is your opinion? Few is important. What is the opinion of others, like Brijesh or Vivek? What is your opinion? Dinesh is there, Shrikant is there. Yes, please.
Yeah, maybe it's not possible to monitor all of them. So I think chart in a way tells about them. So maybe chart.
Okay.
Hello.
Yes.
Yeah, I mean, in a nutshell, I would say supply and demand rather than a factor, as I understand it, is the effect, or all these factors affect the supply and demand. So basically, I think that is
Okay.
the one thing, that is the effect of all these causes, which is war or anything, any fiscal policy and so on.
Okay. Okay. Thank you, Brijesh. Thank you, Shrikant. So if we consider this market is sentiment driven, and market is a mixture of millions of sentiments. So when I started analyzing these sentiments, the most important thing I understood is, out of these millions of sentiments, there is always one sentiment which overpowers rest all of the sentiments. It is like it is a driving force, it is a leading force. It leads a change in the sentiment, and then every other sentiment follows to that direction. It is like if an up move is happening, if an down move is happening, this the uh, the effect of, like, it is like if there is change in the supply or change in the demand, this is driven by some trigger, and that trigger is nothing but, or that starting point, someone is leading this change. And if we can clearly identify who is that someone who is going to start this change, if we are understanding the sentiment of that individual participant, or this can be the set of participants, or this can be a group of participants. If we can identify that, and if we are analyzing these set of participants, then we can get to know something well in advance. Then we can get to know the actions which the market, or the direction of the market, well in advance. And these clues are going to help us to build some opportunities or create some opportunities which are way more powerful than any other opportunities in the market. Why? Because if we are spending our time in analyzing such participants, These participants are nothing but they are the drivers of the market. They are the driving force. They are driving market upside. They are driving market downside. And definitely when we start analyzing this, initially it will not have that, we will not have that confidence that one participant or one set of participants are driving this market. If I ask you guys, do you believe that one set of participants are driving this market?
No, sir.
Right? There is an confusion. Definitely there is an confusion, or we cannot have this clear clue how one set of participant can drive this market. But when I started with this myth or this hypothesis, where I assumed only one set of participants are driving Indian market, and I started looking for the facts in analyzing this or analyzing this myth, or I have spent some time in analyzing this, whether whatever my understanding is, like if one set of participants are driving, I started finding finding some clues. And then after around 8.5 months, I got very few clues, using which I started analyzing market with completely different set of observations. Initially, within this during this first 8 months, I started using all the indicators. So I had started with 14 different indicators. Slowly, when I understood these indicators are always lagging, so if anything is happening in current market condition, the indicator is showing this after it has happened. It is not, they are not leading this activity, they are just lagging this, and they are just showing the effect. They are not going to give us what is going to happen next in the market. They are always printing the historical sentiments. Okay. And then I realized these indicators are of no use, so we should have something which can give us these clues well in advance. And then I realized, and as Sarvanan has mentioned about FIS, yes, there is one single force. And for Indian stock market, these are FIS. These FIS are driving this Indian market. If you are still not able to believe this, I am going to share some proofs, some facts, and these facts are going to change your perspective towards market definitely by 360 degrees from today onwards. If we are talking about these sentiments about the market, it is not no more millions of sentiments. We are not going to study millions of sentiments. What we are going to study is only one set of sentiments. So we will start working on this theorem. What is this theorem? Indian stock market is driven by one set of participants or one set of sentiments. And today, from today onwards, like in next 5 days, I am going to prove this point, that Indian market is driven by one set of participants. There are different news anchors. They are going to give us different stocks. They are going to give, there are different Telegram groups, Twitter channels, YouTube channel. They are going to recommend different set of investment opportunities, but there is one set of participants. They are not going to give us any clue. Their action is hidden in the charts, and we can clearly observe their action via charts. So the charts has some limitation. It is like these FIs are doing whatever FIs are doing with Indian stock market is getting printed in charts. But we should have a different level of observation skills to identify what they are doing with Indian stock market. And the chart has this limitation that they cannot hide the action in the price. And if someone is changing the direction, someone is changing the direction of the market, someone is driving market towards certain point, the chart definitely has some limitations. They cannot hide this from the observer. And charts are the footprints of every participant. It is like if we are going to watch any of the chart for any of the stock, it is going to show us a footprint of what has happened with that chart in the past. And if we are applying one level of filter on these observations or a different level of filter on this observation, then we are going to see what exactly this different set of participants, like the single set of participants are doing with chart, and we can clearly, so with some practice, we can clearly observe their walking, they're running on the charts, they're jumping on the charts, what they are exactly doing with the charts. And that blueprint I'm going to give you, that set of observation skills I'm going to share with you. So from today onwards, if you are going to watch the Nifty or Bank Nifty charts, it will have a completely different level of understanding in your mind, and it is going to blast your mind, I can say. I'm going to prove that whatever I'm discussing in this session, you're going to get the exact method to analyze each aspect of the market, and it will be really simple. It is like, as I mentioned, it is like simple horizontal lines, two horizontal lines, and simple mathematics is enough. We don't need any technical study, any fundamental study. We don't need to go through the board meetings, their profit and loss sheet, or their sales data. We don't need anything. We just need only two horizontal lines on chart, and they are going to reveal everything about any of the stocks. So this one chart which we are talking about, it is common for everyone. Every participants from any corner of the India opens this chart every day. Suppose, just imagine, it can be Reliance, it can be Nifty, it can be Bank Nifty chart. From every corner of this India, same chart is published to the screens of this retail participant, but we have a different understanding about the chart. Like this, millions of participants who are present in the market today, some of the participants might have thought the market will go up, some of the participants might have thought market will go down. Why there is a difference in understanding? This difference in understanding is because of the past. Whatever we have learned in past, this past experience is we are going to apply this past experience to analyze the current market situation. And 99% of it is like 95, more than 95% of the retail participants analyze the market using information. They do not test this information. They do not put their time in converting this information into a knowledge. And that is why they fall into the area where there is a failure. So this 95% of the participants are failing because they start their trading based on the information. If they have something like, if they are processing this information and they are converting, they are putting some effort to convert this into the knowledge, then this journey will be completely different journey. It is like this information is freely available. You open any YouTube channel, you just open any book, candlestick pattern, chart patterns are just freely available. Why these are freely available? Because these candlestick patterns are going to help retail participant to participate in the market. These are not meant to win or lose. The morning star, evening star, why everyone is publicly talking about morning star, evening star, head and shoulder? It is because by knowing this head and shoulder, we are going to invest some money in the market. And who are going to earn via this head and shoulder? Who are the creators of this head and shoulder? Who are the creators of morning star, evening star? These are nothing but FIs algorithms. These FIs are putting some money in some pattern, and they are showing us this pattern in the live market, in the charts. And as per our understanding, we know this is called as a morning star, this is called as an evening star, and we put our money based on this understanding. But we never know when this evening star going to fail, and out of 5 occurrence, when it is planned to fail, when it is planned to success. But if we are aware of FI's investment blueprint, then we can definitely know whether this evening star, morning star is going to help us or going to help them. So this one common chart, after knowing this two lines theory, we all will have same understanding from any corner of the India. If you're looking into the chart, you will have same understanding. There are two directions. Market can either go down or go up. There is no third direction. Still, we are confused. So if we suppose thought today the market will go up and market starting going down, what is the action plan? We never have the complete action plan. We always start with something and then we create a mess in our mind and then we stop following the rules. So how to identify the direction of the market, and if whatever we have analyzed is not worked as per our plan, then what we should do? So here the major role of psychology comes, and we are going to discuss about that role. There are three different trends. One is downtrend, one is uptrend, and there is also a sideways trend. So before 2016, I was not aware of this sideways trend. I was only focusing on uptrend and downtrend. And that's the reason I got this failure in this initial journey of the market. And when I started observing the sideways trend, every clue is hidden in the sideways trend. So it is like, if I can talk about a metaphor to this, what is sideways trend? It is a board meeting happening in chart. So if you watch, if you are watching chart and if any sideways action is happening in the chart, it is nothing but a board meeting is happening. So after this board meeting, they will decide whether they want to go up or down, and the clue is hidden in this board meeting. So if you are observing this patch, sideways patch, it is going to give us a clue in well in advance whether market will go up or it will go down, like that. And there are four kind of exits. Stock market is all about these four kind of exits. What are these four kind of exits? If you are a stock market participant, anytime you are creating any trade or you are creating any investment, your result is toggling between these four phases. You can either create big loss, small profit, and big profit. So every day when the participant is coming to the market, his investments or trades are fluctuating, toggling between all the four phases. So it is like ultimate truth. This one slide is nothing but the entire knowledge of stock market. If you can handle this one slide, you can get success. We can get success in the market. Every time if you are opening any trade, we should know our exit, or we should plan our exit. If you are exiting by making big loss, then we are not going to succeed in the market. If you are exiting with any of these three options, just make a note of this. This slide is very important. Any uncontrolled loss, if made in any of your trade or investment, we are going to fail miserably in the market. You have four different options, out of which we need to avoid this first option. Rest all of the options, if you are choosing any type of exit, you will definitely land into a successful participation area. It is like successful trader, successful investment, successful trader or successful investor always choose second, third, or fourth option. They do not choose first option for their exit. Okay. So this is more about sentiment. So after this session, what we can conclude is, whenever we are talking about sentiments, hypothetically we consider the market is driven by single set of participants, and for us these are nothing but foreign institutional investors. And if these foreign institutional investors are the drivers of the market, then we should align our psychology to study their behavior, and we should map whatever sentiments they have planned. We should map our actions to support their sentiments. Okay. And for that we are planning our psychology. So now we should work upon our psychology which suits our behavior. It is like, if you are if you are good in handling your job, then your psychology falls into the area which is suitable for a participant who is willing to perform a job kind of activity for multiple years. There are some participants, the participants hate job. They like to do some kind of business, and the business minded participants never like the job. So there are different set of participants. Someone likes football, someone likes cricket, someone likes sweets, someone like spicy. So someone likes chicken, someone likes veg, like that kind of thing. So every psychology is present in Indian stock market. And according to their test, they should choose their weapon. And that is why, as we all are not same, so our experiences are also not same, and our actions and results will never be same. So whatever observations I'm going to share with you, you need to choose some of the observations which suits your mind. It is not like exactly copying everything. So why I'm sharing this, and how it can change your journey in coming months or coming years in Indian stock market. If we are understanding this spectrum, how this retail participation or retail participant enters into the market, how he spends his time in the market, how he collects the information from the market, and how he is going to use this information in the market. So there is a small matrix defined based on this activity. It is like, normally whenever we are introduced into the market, this introduction can be by your colleagues, by your friends, or you might be watching some of the news channels, some of the telegram channels. You get some calls from the advisories, and you get introduced to the market, and then you start learning about the market. And then you come across this different candlestick pattern, chart patterns, and these are like magical chart patterns. And if you're studying this, you feel like you have everything. You now have a knowledge of stock market cosmology of, or that entire stock market universe. And you or we directly start apply this into the real market with real money. Even this information is strategically deployed or strategically written in multiple books. These books are generally available. It is like in 100 to 100 rupees you will get these books. There are some good books which you will not get in 100 to 100 rupees, but for them to study these books you need to spend 10,000, 20,000 rupees to get that book. But there are some general books which are available. There are some kind of trainers, they are always sharing general information. They are not sharing anything which is actually required by retail participation. I have shown some of the faces. These are known faces. But if you open the YouTube channel of these participants, they are always sharing whatever information is already present. They are only categorizing this information, and then they are catering or packaging this information in different way, and they are just asking you to learn this or to go through this information. But this is of not useful for retail participation. Why? Because this information is only shared with you to get trapped. So if you're watching one of this pattern is built for you in the market. It is not like you are ready to execute this pattern. It is like they are building this pattern in front of your eyes on chart, and they are asking you to put your money. As you are aware of one of this pattern, you will put some money into this, and then what they do with this opportunity, they either create a false move. So half part of this pattern is formation of this chart pattern or formation of this candlestick pattern. And what happens after this formation, this information is shared with us. And every time when the formation is happening, we cannot get same result and we are going to fail. It is 90% of the times we are going to fail, and you might have observed this. Okay, and it is not if you are still not considering this as an truth, I am going to share with you some of the important level created by these big participants and how they have created this false impression on us and how we have invested our money to get failed. So I have spent some amount of time. It is like one year and approximately 8 months on single chart for every day 6 hours and 15 minutes. And I have processed this information and I have created some knowledge notes. I have created my personal notes and what my mind can handle and what my mind cannot handle. I have separated out these two different observations. Whatever I can handle, I have noted this down, and what I cannot handle, I have noted in a separate column. Then I have processed the information. After processing this information, I have started practically using it. So I have traded a single lot of Bank Nifty when Bank Nifty was around 40, then it become 20, then now it become 25. So I started trading on that with single lot. At a time, only one trade is active, and I had observed market every day. And these observations, when I filtered out, so whatever knowledge I have noted, I have prepared the notes. All the notes I have tested in live market with single lot with real money. And what is happening with my sentiments, I have noted down all the information. And after processing this even information, I have collected some experience. And once I got to know about this experience, I have noted down some blueprints. So there are two major blueprints, or two important blueprints, or 2 page of rules. Only 2 page of rules are important to process all this information and practically use it in live market. And I'm going to share with every one of you these two blueprints. And if you're using this blueprint, you're going to save your good amount of time. It is like a normal retail participant spends around 10+ years, more than 4 to 5 years in processing this information. Then he looks for something which works for him, and that is nothing but knowledge. And if he has some money still left in his pocket, then he can process this knowledge and he can create some experience out of it. And if he is succeeding in that, then he can share this as a skill with others. And once you get this ready-made skill, you can practice this for multiple times and you can become a master. So there are some observations which I have posted. What was this trade? This is one of the trade, 50 points trade. Okay, that is okay. So this is one of the chart which I had shared. This is before war is happening. So these big players had planned their target, and we can observe it 2 lines. So whatever 2 lines I'm talking about is these 2 lines. So if we can clearly identify these 2 lines, we can clearly know where they are heading towards. They are heading toward this point, and we have analyzed this on 4th of March 2022. I'm going to share I'm going to show this on chart. When we have predicted this market is going to travel to this point, and then it will plan its return journey. How we can identify well in advance? How we can say it is well in advance? So on 4th of March, we have analyzed, and if you check the chart, market has exactly bounced at 32,613. How this can be possible? Have you come across any of such method? DIs do not drive the market. DIs are only reacting to the FIs activities. Why DIs cannot do this? Because DIs do not have the DIs are not allowed to drive market in both the direction. They can only push market in upside direction. Okay, it is like upside, or they cannot have access to derivative market. That is what I can say. FIs can build short positions, FI can build long position, anything they can do. Okay, so have you ever seen a method which can give you a clear target?
No, sir, definitely not.
But with these 2 lines, you are going to get exactly like it, the points. Like if you are plotting these 2 lines with practice, you are going to get the exact target. What has happened with Bank Nifty today? I'll just show you. Today Bank Nifty has traveled to this point, and if you check this was the sideways action. These are the 2 important lines on 5 minutes time frame. And then when market crossed any of the side, it has traveled to the 2x side. Why it has traveled to this point? We are going to learn this on going to learn this in depth on day 4. But I'm just today sharing with you how these 2 lines are important and how these 2 lines are helping us, not on this single day, but every day. What is happening with the market? if market is going in this board meeting, it is traveling for 2x or 3x of the distance. Majorly, it is traveling for 2 times of the distance in any of the side. After every board meeting, 2 times the distance. After every board meeting, 2 times of the distance. These things we can observe on the chart. One moment. Okay, so I'll take you to the next screenshot, this one. What we call it as a mastery. You can see the post is of 30th August 2020. If you can check the chart, the market was, the Nifty was at 11647 and Bank Nifty was at 22523. And at that time we said the Nifty will travel to 17400 in one single direction. Like if this high is crossing, where there can be fall or anything, we have not thought of this. We have only thought of one single direction. How this can be possible? Even Bank Nifty we talked about, it will reach to 49,000 before any crash is happening. So there are some scenarios, like market scenario may change during this run, but these targets are already planned, and we are just, if we know something or if we get some clues, like this could be the one of the best opportunity for the investment, where you could have made around 10 times, 20 times of your money. Some of the participants I do have from my session, they have invested in few of these stocks and they are giving us 500 to 800% return, because we have built our opportunity at this point by having a conviction that it should reach to this point. So these kind of skills can be possible. This is not the single chart. We have many different charts, and we have posted this even on Twitter. So you can check all these predictions or projections on Twitter, and even we have posted what is we have posted before and what has happened after. Okay, everything is there. You can also do that. So with this, by processing this information, if you're not going to spend or you're not putting your money on information, then and only then we are going to succeed to the mastery. Normally 95% of the participants are putting their real money on information. They are not looking for something which actually works in the market. And I am going to share with you the ready-made skill, which is going to save your money, hard-earned money. It is also going to save your time, and it is going to change your perspective towards the market. How this can be possible, I am going to share this with you. So to understand this, we have a most important part of our body, which is a brain, and it has a computing power. So it is like a process. So every time I'm sharing this paragraph to understand what we are going to learn, how we are going to process this information. It can be difficult in the beginning. It is like, can any one of you read this for me? This para, any one of you?
May I, sir?
Yes, please.
It doesn't matter in what order the letters in a word are. The only important thing is that the first and the last letter be at the right place. The rest can be a total mess and you can still read it without any problem. This is because the human mind does not ready every letter by itself, but the word as a whole.
Thank you. Thank you, Samartha. So what we have understood in this para, so initially when you are reading the first line, your mind has started observing the pattern, and the pattern says the first and the last letter in this word is at the right place. Rest of the letters are just mess. Still, once we have identified this, we might have taken some additional time in reading first line, but after that, once you are aware of this trick, you can read the rest of the lines with a normal speed. And this mind has that capacity. Once we are knowing this pattern, we can clearly identify this pattern, and we can subconsciously ignore this pattern and we can just execute without any additional effort. So consciously you might have read first line, but subconsciously, once we are aware of this pattern, we can do rest of the activity, and there it can definitely consume less energy in executing or understanding the rest of the lines. The same way I am going to share with you a method to analyze these two lines, and this method, if we are applying in live market, initially it may take some time, but once you are aware of this technique, it will have a effortless. It is like you can take only 3 minutes to understand, analyze any stock. Within 3 minutes, you will know the kundali of the stock. So towards the end of the session, we are going to discuss some stocks and when exactly you should invest in these stocks, or when you should have come out of these stocks. It will be shown in the chart. And tomorrow we are going to understand the logic behind this method. Okay, so today we will see some stocks. You are going to give me name of some stocks and I'm going to share what is our analysis saying about this stock, and then we will observe this stock for next 22 days. And tomorrow I am going to share this method with you so that you can also start analyzing this with the same method. Okay, so actually, if we are participating this market, we are actually part of a spectrum, or we are falling into some of the area of the spectrum. What is the spectrum? So there are two major kind of participants in the market. One kind of participants who are expert in adjustment. Who are the expert in adjustment? I'll come to this point. First, we need to understand some of the participants are there. They are expert in understanding the market structure. So what is the market structure? So they can understand market by knowing some candlestick pattern, some chart pattern. But by knowing candlestick and chart pattern, with experience, you can say now, okay, this candlestick and chart patterns are not giving us an edge. So for edge, we need to derive something which has some power beyond this candlestick or chart pattern. Okay, so there are some experts in the market. They are expert in identifying the market structure. It is like if head and shoulder is happening, what market will perform next? If morning star is happening, what market is going to do next? Like that, I am going to share some of the observation using which we can clearly identify how much time the stock will take to reach to certain percentage. It can be 1%, it can be 3%, it can be 12%, it can be 75%. In how many days this stock is going to touch to next 12%? Exact duration and exact distance we are going to understand. So we fall into the area which is closer to expert in market structure. So we can have these skills, or we can have this observation using which we will fall into this part of the spectrum. There are some participants, they don't care about the structure. They know if they are building any positions, they know how to adjust these positions to generate a positive result. So they keep on adjusting their position. So they will invest some 50. They will first buy 50 quantity. If market is falling, they will buy another 50 quantity. If again market is falling, then they will again buy some 20-25 quantity. Like that, they will keep buying whenever the fall is happening with the market. And if the market is started going up, they will keep booking some of the quantities. And they do not care about where market is heading, whether it is downside or upside. They become a master of adjustment by performing this activity again and again. So what they have understood over a period, they don't care about this structure. They can enter market at any time and they will just keep adjusting. So they are expert of this adjustment. But I am going to take you towards the area where we are near towards the expert who is aware of market structure. And whatever rules I am going to share, whatever changes I am going to make with your psychology is to align this understanding with your mind. So whatever market sentiments are there, whatever market structure is there, we are going to align our psychology to that structure. Then this mapping will help us to generate good amount of result. Suppose market sentiments are something different and your psychology is like you are not expert in adjustment. suppose you are not expert in adjustment and market is preparing some structure and you are not expert in adjustment. You are trying to become a part of this area, but as you are not expert in adjustment, you will continuously keep creating a result which is not beneficial for you, because you have not identified the right spot. So if your skill is good in adjustment, then you should fall into this area. If you do not have this skill, then you should identify the right spot. So there can be a trade-off also. So you know certain part of market structure, certain part of adjustment, then you can be at the center of the spectrum. So we should first identify where exactly we are landing. And once you know the area, then we can start defining the rules, because these rules are directly proportional to the market sentiments. And these are directly affecting to our psychology. And market is majorly is about handling our psychology. If you are applying anything by knowing the market sentiments, and if you are not getting the valid result, then it is going to affect negatively to our psychology, and it is going to create more negative results. So we should apply our brain in such an area where we are aware of this ground. If we are not aware of the ground, we should not use our weapons like that. Okay, so how you should start our journey? So this journey should be like relaxed. This person, you can see this person in the picture. Rest of the participants, either they are watching something or they are busy in doing something, but this guy is like, he do not care about this journey. Why? Okay, so this is an metaphor again. So I have shared the example of train. So when this guy has caught this train, he is aware of the destination he want to go and where exactly this train is going to stop. But rest of the participants, like if you ask this participant, he is not aware of this, whether this train will stop beyond his destination or not. It is like he is only aware of 2 stations from current stop. So next 2 station he is aware of, but he is not aware of station beyond this next 2 stations. There can be some participants. If you ask, like suppose if you are asking to this participant whether this train is going to Delhi or not, he may not know, because he is not traveling towards Delhi. His station may be around after next two halts. So he is only aware up to that part. But there is one guy who is aware of where exactly this train is heading towards. Why he is aware of? Because what he has done, who is driving this train? The motorman is driving this train, and he has asked the right question to right participant. He has asked motorman where this train is going, and this motorman has said the final destination for this train is whatever Kanyakumari is. And then he is also aware of that he wants to go to Kanyakumari, and he is sitting in the right train. Like that, there are multiple tools to analyze the market, but whatever tool I am going to share with you today, the method which I am going to share with you today, this is an ultimate method. And no retail participant, no YouTubers, no books, or there is no one in the stock market cosmology who is aware of this method yet. And if he is aware of this, he could have shared this with any of the retail participants. So there can be either 2 situations. Either he don't want to share this with anyone, if anyone is aware of this, or that guy is not aware of this method. So whatever I'm going to share with you is 24 karat pure gold, and it is not available to any of the retail participants, any of the other retail participants. And you are going to see the power of this technique. Okay, so how we have defined all these rules? So we have identified there is an one break-even point. Every mind has an break-even point. It is like a point from which your mind start behaving in completely weird manner. It is like, if I ask you, there is always a different value for this break-even. I would like to ask the 6 participants, like 5 different participants, a question. How much in terms of loss, if you are watching an amount, how much in terms of loss is a big loss for you, or what is that amount you don't want to see in loss, and after that your mind starts behaving in completely different way. It can be minus 1000, minus 2000, minus 3000. What is your break even point? For Dinesh it is minus 3000 per trade. What about others? Minus 3 to minus 5 for Samartha. For Sarvanan it is minus 2500. For Brijesh and for Shrikant, what is this figure for you?
Yeah, maybe minus 5,000.
Minus 5000. And for Brijesh?
Yeah, in my case, it is not a fixed amount as such. I mean, it depends on how much positive, I mean, realized profit I am, and accordingly I take a decision. Like, for example, for a
Okay, so
month, if
it
I
is
want
like
one
this
time,
amount is
yeah,
like whatever realized profit is there. If we are adding a minus sign against that,
correct.
that could be your break even,
Yeah,
right? So
yeah,
every mind has this different number and different criteria for this break even. And if by any method we can map this break even, before mapping we should identify this is our break even. And in the entire trading journey, sooner or later, if you are able to identify your break even point, if this is an eureka moment for every trader mind, it is like once that trader is identified, rightly identified its break even, he is rightly identified what is helpful for his or her psychology. And this break even point, if identified in early stage, it is going to save a good amount of money for their traders journey. Good amount of hard money can be saved if we are identifying this break even early in our trading journey. And that is why we have identified, or we have defined one method using which we can identify our break even, we can use this break even, we can create a shield around this break even, and by creating this shield we can map the market's risk with this break even. And as once we are aware of this shield, and once we have some method to map this risk, then we can win this market situation. We can never come to a situation where our mind is boggling or mind is doing something weird, because by performing some by defining some rules, we will not allow our mind to cross this break even point. So you may never see minus 2000 in your entire trade, and if your mind is not watching minus 2000, he or it is not going to behave in weird way, and it is going to hold that trade, hold that investment for longer duration. That is what we have done. So after day one, we have understood what is break even, what is uncontrolled loss, what are the different phases of loss, how we are differentiating the sentiments and the psychology. If you are talking about sentiments, it is about what is happening in the market. If we are talking about psychology, what is happening with our mind, it is referring to psychology. Okay. And once we are aware of this break even, suppose for an example we are considering minus 5000 as an break even. So how exactly this profit and loss is processed by our mind? How do we look at it? So I'm going to share some facts about our mind, and you are going to confirm from your side whether this is what is happening with your mind right now. Then we can, if once we are aware that this is actually happening with the mind, we also have some solution to not to happen. Okay. So I'm going to share some observations. It is like whenever our mind is watching losses, we start observing loss by knowing the numbers. It is like minus 400. Initially we read it as a number, minus 400. When the loss becomes big, it becomes minus 1000, still it is a number for us. When it is approaching towards our break even, like minus 2000 suppose is your break even, then at around minus 2000, this number loses its identity as a number, and it builds a new identity in our mind. it gets converted into a color, that is red. After 2000, if any number is changing, like suppose it becomes minus 1200, it again start appearing in terms of number. But if it is going beyond 2000, it becomes an color only. So mind will never process this as a number. It start processing this as a color. It ignores understanding, or it ignores that it is also a number. It starts addressing this figure as a color only. Have you observed this with your mind? If this break even point is crossed, like 2500, minus 3000, minus 3000, or minus 5000, if it is crossed beyond 5000, your mind start noticing it as a color. Your mind starts ignoring this. Have you observed this with your mind, any of your mind? If you have any different observation, you can just state that observation.
Yeah, I mean, for me, I think once that break even approaches, there is kind of a maybe paralyzing of
Yes.
decision that can happen, that you're paralyzed with your decision making
Yes.
if
So
it approaches your break even.
till this point, we are okay with our mind, because we have some plan for this. We
Right.
also have some plan beyond minus 2000, but mind behaving in a right way up to minus 2000 according to plan. But whatever we have planned beyond minus 2000, mind changes its plan, and this number become just colors. It is like red color for us. And on the other side, if you are watching profit, okay, if you're watching profit, initially when it starts showing us, we are more fascinated about green color. Then this color will become a number slowly. When it starts increasing, like plus 1000, plus 2000, it will come to a point where it is after 2000, after plus 2000, when it is going again back to a lesser value, then our mind says, now we should book this. Why we should book this? Because it is fluctuating. Like our mind goes into the greedy state. So there are two states. It is like fear state and a greed state. And in greed state, the green color soon becomes a number, and our mind says book this number. It is like after watching this plus 2000, if it is reducing, whatever is the next figure plus 200, our mind says just book this number, just book this profit. Or what happens immediately if after this green color, if your profit becomes a loss, like after plus 200, if your position become minus 400, then our mind is completely switching its state. It is like when at this point it had thought about booking this profit. Once it is becoming a red, it will just go into some other state. Instead of booking, it is going into some other phase, or it is going numb, or it is saying we need to wait to watch green again. And whenever you are watching green again, our first action is to book this profit. So this is how minds process this information. But how exactly our mind should behave in such case? So instead of processing this information, there should be a process. So it is not about, if we are talking about this, how the mind processes it is not important. How the process mindset is really important. If we are talking about this, we should build a process around this action. If we are building a process around this actionable points, then we are going to get some good result. Then we are behaving like an robot. So whenever we are approaching towards a loss, whenever it is addressing as an red, addressing as an loss, mind should first start identifying this is an red color. And then the next action it should trigger is minus 2000 is our limit. It should not go beyond and watch this number. Whenever minus 2000 is happening, it should register it as a number, and it should book this as a number. If we are talking about profit, whenever it is happening green, it should first identify this as a number, and beyond this number, if it is going beyond 2000, it should turn into a color, so that we can hold our profit for longer duration. So there is some trick we should perform with the mind. To understand this trick or to implement this trick, we should understand these different phases. So any movement as a trader, if you are opening any position, this position always have this 4 kind of exits. If you are fresher, if you have an experience of 1 year, if you have an experience of 10 years, if you have experience of 20 years in the market, this is same for everyone. So that is why we call it as an in two lines club. What we call it as, your last trade is your experience certificate in the market. If you have booked uncontrolled loss in your last trade, that means you are still fresher in the market. If you have booked small loss, small profit or big profit, that means we belong to a professional trading group, or we are experienced trader. If we are still making uncontrolled losses, that means we are still fresher in the market. So whether you are fresher, whether you are new trader, whether you have 10, 20 plus years of experience, this question paper will be same for everyone. And we need to close this trade in any of these phases. There is always an option in our hand to close this trade in any of this phase. So always the trade starts from some of this area, from small profit and small loss. Whenever we are opening any trade, we are opening any investment, it starts from this phase. Then it starts toggling towards either this direction or this direction. And this is an ultimate truth about any trader. Whether you are experienced or not, we should handle this in live market, and we should have mastery and handling this. When we are closing this trade, this should be a right phase. It should be either between this, beyond this. It should not be between this phase or never beyond this phase. We should not close our trade when the price has entered into this area. Okay, we should close when the price is toggling, or price is certainly there for some time in this patch. We can book this, we should book this, we should also book in this area, we should also book in this area. But how to do this? We have multiple rules to do this. So I'm going to give you a small trick. Mind is actually following a default algorithm. We are going to make some small changes in that algorithm. What is that algorithm? What is the gravity of our mind? The gravity says we are aware of loss and profit, and we also make some plans to handle loss and plans to handle profit. And this plan is executed by one mind but two different states. If the mind is in fear state, the plan execution, if mind is in fear state, whatever plan we defined, it has some different level of execution. And whenever the mind is in greed state, the same plan will have different level of execution. The same mind can handle fear in different way and greed in different way. And because of the trade, our mind is continuously toggling between this fear and greed, big fear, big greed areas, small fear, small greed areas. And the default state of our mind is to add hope to fear and greed. So in this case, how mind operates, just try to understand this state. Whenever we are in fear and we are adding hope into that, our result of this chemical reaction comes out as an weight. That means whenever you are making any loss and you are adding hope of coming to a positive direction, our mind comes to a conclusion where it gives a result. Whatever plan is there, it gives us as a result weight. Something good will happen, weight. Whenever we are in greed and if we are adding hope to this, our mind is coming to a conclusion, just get it. So if you are watching small profit, our mind says get it first. If you are watching small loss, our mind says wait, don't get it. It is like don't book it, just wait, it will come green. Then there will be a phase, it is becoming more and more red. It will again trigger a point, wait, right? Then there is a phase. Just imagine this journey. If you have started this journey, you have seen small profit. After that, your position has taken a U-turn. You are coming to small loss. You are coming to big loss. You have actually come to a big loss. Again, there is an U-turn happened, and the loss has become less. Then it has become to a less profit. And now actually you are running towards big profit. But while crossing this point, your mind says, because you have seen greed, you have seen fear in same journey, it is actually a traveling, it is making a difference in our mind. If you started traveling from this point to this point, then it is very easy to handle. But if you have taken multiple U-turns, then whenever you are traveling to actual destination, what it will do, your mind will say, if it is adding an hope to the grid, it is saying, get it. You should not wait now to create an actual profit. Our mind says, just book this. Whatever profit is there, just book this first. Okay. Is this happening with your mind? Most of the times, if your journey is starting from this point with small profit, and if it is coming to a fear area, after returning to this area, it gives us an action like greed plus hope, get it first, right? All the time. So how to handle this? There is a small change we should do. This is always a journey. This is toggling. Mind is always toggling. We should change. So what the plan? How we define the plan? The plan will always consider a hope. So there is an always scope we have kept open. Every plan will be added with the hope. And this hope will be toggled because of this fear and greed. The continuously toggling between this fear and greed, the hope will be keep on adding. And whenever we are adding hope in fear, it is going to give us an weight. Only thing consciously we should do in this case, if in case of fear the hope is added, we should change it to get. And if we are in profit and hope is added, then we should change it to wait. How it is going to affect us? So it's the same journey we are starting, and suppose we started making small profit. The moment you started making small profit, you should keep your trailing stop at 0, 0. Why? Because if U-turn is happening, you are still in grid part, and the hope is added. It is telling you to a wait. Sooner or later, once you are entering into the fear part and hope is added, it is going to give us a action, get it. So this is an action you have added to get. So you will book this small profit or no profit, no loss. Suppose your journey has reached to this point and then it is taking U-turn. Then you can shift this towards small profit. Instead of 0, 0, you can book shift towards small profit, so that when the return journey will be, so when you are started entering into the fear part, if you are into the grid, you will keep on waiting. If you are adding hope, you will keep on waiting. But if it is trying to enter into the fear area, you have already applied an action to get it, and this get will give you a small profit. Suppose after entering, you started running toward this point. So this is the spot where you should apply this plan again. If you are in fear and hope is added, this hope should give you a result of get. So you should book this small loss. So in this entire situation, you will never reach to big loss, because at this point, your mind will always ask you to book this to get this loss. And you can definitely approach toward this point, because it is asking you to wait. If you are making small profit, it can turn into big, it can turn into really big, it can do ultimately big, and you can keep adding a action. It is like get action, which is few points away from your profit. I hope you are getting this point. This small trick you should make with your mind, and it is going to change your result drastically. What will happen maximum, what will happen? Suppose you have started with a trade and you have started with this spot and you saw small profit and the trade returned. You have kept your stop loss over here. It is like you have not booked profit or loss. That means it is like you have not entered into the market. You were never present in the market. It is always better than making big losses. Thousand of times you should enter and you are exiting with no profit, no loss is better than booking big losses. Sometimes market will reward you for this action and it is going to give us a big profit, and only few times it can give us a small loss. So you will never fall into the area where it is coming into an uncontrolled loss making area. So this is you should do with your mind. Hopefully you have got this point. What is wait and get and how should we apply? Would it be challenging to implement but interesting to see in long term? Yes, you can definitely implement it. Just try to apply consciously first. So if you are consciously applying this, after opening every trade, when you see small profit, what is the definition of small profit? 10% of your capital is a small profit. When you see this 10% already returned from the market, suppose you have invested 10,000 and your profit is 1,000. Then you should keep your stop loss at no profit, no loss price. And then keep that trade open. Either it will execute and it will close into no profit, no loss, or it is going to give you more than 1,000. But it will never give you minus 10,000. Okay. Just try to implement this with psychology. Just try to make this simple change with psychology. It is going to give us good result in longer duration. Okay, so this is how we have understood get and wait method, and tomorrow we are going to understand, as we are aware of get and wait, we are going to introduce to a shield. So we are building a shield around it. What is a shield? This minus 5,000 rupees. This minus 5,000 rupees. This minus 5,000 rupees is creating a chemical reaction in your mind. If we are building a shield around it, which is going to protect this minus 5,000. So if we are not showing this minus 5,000 to your mind, then how this mind can be in control always? It is like inside this shield, if your loss is below minus 5,000, your mind is always stable. It has a stable state of mind. All the actions will act according to plan. The result will be according to plan. The all the results, all the actions will be as an expected or as planned. If anything going beyond this range, then your mind goes in unstable state of mode, and it performs the actions which are not planned. It also gives us a result which are unplanned or unexpected result. So identifying this break even is really important. And once we are identified this in our early stage of trading, we can map this, we can build a shield around this. And how to build a shield? What is the inside? How our mind behaves when we are inside this shield and when we are outside this shield? So that we are going to understand in next session, that is day 2. So what we have understood today is what are the different sentiments which are present in the market, out of which we are going to follow one sentiment, which is FI sentiment. Second thing is we have understood what is the role of our psychology, where it should land in this entire spectrum. If we know the psychology, we should know our break even. If we are aware of the break even, we should build something around this break even. It is like, just imagine you are traveling in the boat, and what is the spot where you should like to come out of this boat, or we should if suppose you are boarded or you are in the boat, which area you will like more to come out? Is it an uncontrolled loss making area or controlled profit making area? If you are toggling between this entirely in these different phases, suppose you are continuously toggling between these phases, which is the peaceful area you are getting down from this boat? This uncontrolled loss, this is not definitely you will not like to come out of this boat when the boat is in uncontrolled area or in uncontrolled loss making area. You will always like to come out when the boat is in uncontrolled profit making area, right? So we are going to plan this boat. We are going to define some rules to get into the boat, get out to the boat, and we are going to map this metaphor to the real market. So we will plan our activities accordingly, where we will never get down in uncontrolled area. We will always get down beyond this range. So because mind gets involved, if we are getting down in uncontrolled area, our mind gets involved again, and then we perform this big loss. If we are exiting, or if you are getting down in the area which is suitable for mind, then it does not involve again, or it does not have some other plan to get involved. And that's the major role of our mind. Okay, so continuous adjustment of this break even is really important. And how this break even is adjusted, what is the market risk, how it is going to map with our psychology, everything we are going to discuss tomorrow. And tomorrow you will, after day 2, you can invest in any stock at any price on any day with same risk. What I'm saying, just select any stock, it should be at any price, but you will enter at any point in time with same risk. Your risk will always same, and you can definitely map actual risk, and this risk will be within inside this shield. That is what we are going to discuss tomorrow. And so what we are doing by what we are actually doing by creating this, we are building a shield or building a method around this entire activity, where we will never approach towards uncontrolled loss. And if we are fixing this, then this fix is going to change our entire trading journey in coming future. Okay, so we should define our own shield, and this shield we are going to define in tomorrow's session. So for tomorrow's session, I'm going to share some of the charts just to build, just to keep the curiosity open. So would you like to see some of the past observations and what has happened with the market, how these two lines are important, and how the market is different on the chart? So content wise, we have finished our today's topic, which is more about tuning the right psychology. So we have tuned to right psychology. Today onwards, we are going to observe what FIs are doing in the market. And I am going to share some of the observations now towards the end of the session. If you have any other queries after this discussion, you can put your queries. So I'm going to share Bank Nifty chart, which I have observed for multiple years now. Now it's been 5 years. Continuously, I am observing this chart. Okay. So this is Bank Nifty chart. And then you will see some of the movements, like some of the movements on the chart. So it has high, it has lows, highs and lows, highs and lows, then high, this low. If I tell you this high, this low, or this high, this low has some relation, there is some relation to this level. This point, this low is defined well in advance. So when the market has created this high and this high, at that point, at that point, the market has planned to go to this level. Would you believe this statement? Will you believe this statement that when the market has created this high, they have already planned the market should go to this low? Even at this point,
So you are
they were
saying, you're saying
yes,
this without COVID being there, or
without
COVID being there in 2020,
yes,
then the market would have reached.
yes. The COVID is just an benefit of a situation. It is like for retailers, how the retail mind is developed. The retail mind is developed in such a way that every market condition, the retailer is asking for a reason. And if market has justified the reason, then the retailer is okay. So if they wanted to make this great fall, they have just applied the logic. Because of COVID, market has created this low. Only because of COVID. And this COVID can justify the retail mindset. Okay, because of COVID, this was the huge correction is made in the market. But even at this point, the market had planned to go to this point. This point has relation to this point. This point has relation to this point. I am going to share how this is related and how they can plan this. How this is possible? This is possible with the algorithms. Definitely, this is not performed with human minds. The logic behind this are some algorithms. And I'm going to share with you that one ultimate algorithm which is driving this market. Okay. It is very easy. It is not that difficult. And as I mentioned, there was one clue which is accidentally made it visible to retail participant. It is like on 13th March 2020, you can see the entire market was falling. So I am going to explain the entire market journey using this single candle. So on this day, if market is falling miserably, who are this guy buying this market and why they are buying exactly at this level? There is some logic behind buying. Do you believe this buying movement is created by retail participant? Do retailers have this money, or they have this single thought process? They are going to buy from this point up to this point only. Do you believe this point? Or who do you believe that if the entire market is falling, why one should buy at this point? Why not at this point? Why not at this point? Why exactly at this point? There is a logic behind this action. For Nifty, for Bank Nifty. So I am more proficient about Bank Nifty. So I'll show this first in Bank Nifty, and then I'll take you to Nifty as well. If we get some time in upcoming session, I'll also explain the Nifty chart with the same understanding. Same 13th March 2020 in Bank Nifty. You can see this green candle. This green candle. Okay. Now I'll share the logic behind this. So there was an okay. Just imagine this. So someone has controlled market and pushed downside. Someone has controlled market at this point and pushed upside. One fine day, this has happened. Okay. Okay, we will go back in history later. We will first start with this candle, and then you may get the relation why I'm plotting this like this. So as per two lines theory, the market is always controlled in a range. For retail participants, we are more about the price. 14.9, it is like, again we are coming to Nifty. Why? Where is Bank Nifty? Okay, it is not showing Bank Nifty. Okay, now it is Bank Nifty. Sorry. Okay. So this is the candle. Just imagine this candle. As per two lines theory, market is always controlled between two lines on any time frame. Okay, so the higher the time frame, the range is the bigger. So if you are watching market in daily time frame, then for daily time frame, the entire market as an wholesaler or as an FIS, how they watch this market, they are controlling market in this range, in these two lines. So for them, it is a range. For us, this is a number. For retail participants, we are more focused about, it is like if I ask you about today's closing, we will talk that 35,354 market has closed. So we are interested in single price, but big players are always interested in two control points, and they create any pattern, any candlestick pattern, chart pattern within this range just to attract retail participants. And that is what has happened before Corona or even after Corona. So I'll first dictate the story for after Corona, and then we will go to before Corona section. You guys are ready to spend next 10 minutes? Are you guys still interested in knowing this? Because we are already went beyond our time.
Yes.
Okay. So how these two lines are important. So I am focusing on this 13th March 2020. So when I started sharing this understanding, it was year 2017. Since 2017, I was sharing this understanding, but accidentally in 2020 fall, I got the proof of this. Whatever I was sharing, the market is controlled between two lines, and when these two lines are crossed, market can travel to a defined direction for defined distance. Okay, so now I am going to mark these two lines around this. So these are the two lines, and there is an importance of these two lines. So this is the range for which they have started buying from this point, and they have stopped buying to till this point. And why they have started from this point, why they have stopped buying at this point, it has a logic. We will come to that logic, but before that, as we are on daily time frame, the range of daily time frame, the control points for daily time frame is beyond this range, and they have only utilized 1/3 of this range. So the entire range is actually, if I creating three different parts for this, it is like, I'll just calculate this for you. 2160 is the range. One moment. 21, 518, 579. Sorry, 589. 2160. Just imagine this number is 2160. So actually, the control is like this. So they had a power to utilize this entire area, but they had controlled the price in 2/3 section or two-third part. So two lines says the market is controlled within this range, and if from any point the market is, suppose the decision is being made to go up, then if either of this control line is break, suppose upside is break, downside is break, market will travel for twice the distance. Have you understood this simple rule? Market will be controlled in two lines. Any of the line is crossed, the market will travel for twice the distance. Okay, that's the most simplest rule. So in this case, when they thought of buying in this falling market, they have deployed 2 bags of money, out of which 1 bag is important. So we are only referring to half of this candle. Why half of this candle? This has a ultimate meaning. I'll show this, how they have manipulated this. So this 2160 is important number. This is half of this. How we have identified this, we'll show you. But before going to that point, so from any low, if the market is crossed above 2160, it will travel for twice the distance of 2160. It should be like this. The first rule is this. Okay, it should travel to twice the distance till this point. But before that, if price is controlled and again pushed down by 2160, then the market will be controlled within this range. Have you understood this point? So this is a decision making criteria. From any low, 2160 is broken, uptrend will start. From any high, 2160 is broken, downside, downtrend will start. And if the target is not reached and it is taking U-turn, it will go to sideways. And these are the newly identified 2 control points on daily time frame. So as I mentioned, now these 2 are the control points on this daily time frame. Have you guys got this point? How I have identified these 2 control points? Just say yes or no if you got this point or not. We still have 5 minutes. We are going to understand this in depth on day 3 and day 5. Not completely. Okay. So I'll repeat it for you. So what they are doing is they are not caring about single price. They are controlling market. They are creating lows by controlling price within this range. And they are also creating highs and they are controlling. So their control point is not single price, but a range. Once the market is controlled in the range, okay, this range is responsible for, now this is an board meeting, this is an sideways market. If market is crossing this boundary upside or downside, the market is going to travel for twice the distance, as I mentioned. Okay, and in this case, you can see at this point the market has created a low which is below this range, and because of this additional manipulation, market has traveled to the third X. It is an exact point. Always if board meeting is happening, market will travel to 2X. Why third time? Why it has also covered third box? It has some meaning, and we will discuss in depth on day 3 about this. Just forget about this third X. Just think about this 2X. Till this point, there is no one will stop the market. And you want to check this journey, what is happening to this journey during this entire move from any high. Whenever the market is crossing this line, from any high, market will not allow to cross below 2160 from any high. Can you see this? Only at this point market allowed to go below. And that is why the third box is added, because they have put some additional money to create this move. And because of this, they had to cover out. They have to cover this money. Sambadala. Okay. So this coming below this 2160, they had put some additional money and they have taken out this additional money from this point. Until this, from every time when it has created high, the market has no capacity to close below 2160. This was one fine day it has closed, but again it went back. Okay. Have you understood this, or still there is a confusion? Some part of this. You might have understood some part of this, but still if there is a confusion, so we will go in past. When the market has control between these 2 points, so we will mark this point first. Okay. We have marked these points. Market started traveling up. This was false breakdown tried to happen, or the market has created false break, and then it has actually created this range to break down. So I'll adjust this properly from the high. This is fall. This is fall. And this is fall. This is defined, designed, and planned well before, well in advance. So this is the same range. Market started going up. This was false downside move they have created. False downside move. Before the fall, they have planted a false fall. And then again, they took market upside, and then they have given us third X. So this additional money they have put, and because of that, market went to next third X. But from this point, exactly how the market is stopped. So to prove this point, I have another level of understanding. So the bank nifty, if you are checking bank nifty stock, the bank nifty percentage, bank nifty has some magic figure. If it is falling beyond 17%, if it is falling beyond 17%, we call it as an correction. You go in past in any year and just check the number of corrections has happened. These are multiple. This is assignment for you. These are multiple of 17. So if the market is falling beyond 17%, the next stop is multiple of 17. What is that? 34%. Can you see that? If This is 17%. This is 34%. What is the third stop? What could be the third stop? Any clue? Yes, 51%. This is 51%. So 17, 34 and 54. So to continue any trend, what is the definition of correction? So if the market is going in one direction and it is not closing below 17, then it will continue, keep on making higher highs. The moment it is closing below 17%, it is going to create a low. Suppose I want to continue the downtrend. So to continue downtrend from this point, how far I should go, by how many percentage to continue the trend? To continue uptrend, if you would like to continue the uptrend, right? I will go up, come down by 17, go up, come down by 17, go up and come down by 17, go up, come down by 7, come down by 17. If any moment I am closing below 17, then it is an correction, and this correction can go to 34% or 51%. Suppose I am coming down and I want to continue this fall. How much, by how many percentage I should go up? What is the answer? To continue downtrend. Are you guys getting this point, or there is any confusion?
Yep, 17.
17. So just check this. As we are going for downtrend, this is 17%. From this point, market has come to a point, taken a reversal. If it is, suppose on that day, if it would have closed above the 17%, from here onwards, we could have started our upside journey. But no. So in this case, the market had a plan to go down, and that's the reason it has not went beyond 17%. And if you know this clue in advance, what I did with this information, you can go and watch one of the video. I'll share a YouTube channel also with you. I have caught around 2,300 and more than 2,300 points in Bank Nifty in the first and second week of March. So I have caught that point during this phase, and I have created video around that with all the proofs how I have caught this point. Okay, so to continue this trend, continue the fall, it has went down, reverse by 17, and it is went to the 51%. And if I want to stop anything over here, the moment price is coming above 17%, from any low, this is 17%, from any low, I should start investing into the market. I should start investing into the market. And this is the point where if you are investing any money in the market, this could be long-term bull run. This could be long-term bull run. And if you are creating any position in this case, how to handle this position, this we are going to understand in tomorrow's session. So whatever returns I am saying, so from this low, if market is going above 17%, so bull run is started, and we can conclude this bull run. And that's the reason why market has not corrected at this point. From this point, when market has crashed, When it has crashed this point, just mark 17%. Market could not sustain below 17%. It went for one day, come back again. It went for another day, it came back again in same range. From this point, it is 17% only. From this high, it is 17% only. That is why we are still not part of correction. And to identify this current control point, the same logic, 2160 logic, which we have applied. So price has controlled in 2160. Just imagine this. 83, 63. This is 2160. This is 2160. We are going to put some light on this more in day 3. But this is an interesting topic again. Just check these control points. So this and this is the control point, and market is going to toggle between this from any high. If you know this, how market is going to toggle? And now we are stuck in this range. So at this point, when I say what was the range? What was that which I had mentioned in the slide? One moment. $32,613. This is 32,613. And just check where the market is now. So at this point, we said the market will bounce back from this point. How this is possible? 32,613 is this point. And someone could have concluded that this is an correction. Market is going to fall like hell. But no, there is a logic behind every action. So just imagine if you are breaking this range, where the market will head, upside 2 times or downside 2 times from any side. If it is crossing, it can be upside till 54,000 is the next target for Bank Nifty. It could be. Okay. So we are going to understand this on day 3 and day 5. So I guess for today it is enough. How from this point we have reached to this point and what the clue was hidden in this range. Similarly, I have shown some clues which are hidden. Also, there is a range. If we are going for weekly range, so weekly range look like this. This is an weekly range. And if we take a fall of this range, we also get this exact point. And if it is like this, the market is going to 1x. And here we are. From here, we got this decline and market fell down. So we still have the scope of going 1x upside. So till this point, 49,000, approximately 49,000, there is an plan. And when we have shown this, we were at this point, at this boundary. And that is why we have shown when the market is crossing this boundary, like when market is crossing this point, our plan is to go up only, not downside. Okay, so we are going to put more and more light on this topic. Hopefully you are still interested in understanding this. So today we will close this session, and tomorrow we will meet again for day 1, where we are going to understand in and out about stock. So any stock you are going to pick, you are going to get complete kundali of that stock. Okay, so I'm done with today's session. Do you have any other queries? Please proceed with the queries. Otherwise, we can close this session and we can meet tomorrow. I'll share the timing for the session because some participants are requested the time beyond 8:30 or something. So I'll just discuss with them and then I'll share the final timing. No other queries? And have you or any one of you aware of this information before? Or are you interested in knowing this blueprint, knowing this hidden agenda of price, which is driven by big players? So I'm going to share, if you are really interested in, I'm going to share every pin to plane information to you. Just don't worry about it. And just do not map this rupees 199 for these coming 4 days. So we are going to discuss lot more than this. And it is definitely going to change your conviction and confidence towards the market. Yes. If we are knowing this into 2020, you just go and check. I'll share my YouTube channel. I have taken one entire session, introduction to stock market, just to explain the opportunity, how big this opportunity is. And we were at this point in where while we are conducting this session, and we said that the opportunity is too big, and this is once in a lifetime opportunity. And this is also recorded in the session, introduction to stock market, on our YouTube channel. With there is one chart I have shared during that session also. And this information is really helpful for retail traders like us. Like some of the participants had invested when the market has crossed this point. Just imagine they are holding Tata Steel and other stocks with 800% returns. 800%. This is too big. We are like, initially I was not able to handle 10%, 20% return. And this is with proof. Like you can see this, the screenshot of that guy. And you can personally talk to this guy. If you go through this all screenshots, I guess this one is the 800%, 586%, 258%. Every number is 3-digit. This is really possible. I have shared the journey of that participant. The similarly can happen with us. So he has started in November 5, 2020. He has started with advanced sessions, November 5, 2020. And he has started with some amount, and how he's proceeded with his understanding, how he is earning now. There are some participants, they were earning 500 rupees per day. But with this 2-line series, now they are earning 30,000 rupees per day. How this can be possible? And I am not saying this, it is shown with the proofs. So when he was earning initially, I have shown some proofs, and now when he is earning, his earnings are shown. These are daily earnings. How this can be possible? Yes, this can be possible if you know what this FISR knows. FI knows or FI do create in market. If you are aware of such skills, we can definitely do some activity. Okay, so hopefully we will be there on day 2. And I do not care whether there is 1 participant or 2 participant. I do conduct this session because I want to record this chart. I have recorded the journey of stock market from this point. Sorry, from this point till this point, and we have projected some areas like market will reach to this point, then it will have 4,000 points fall, then it will reach to this point, then it will have 4,000 points rise. And then we have also collected the evidence how we are projecting, and this all the evidence are present on Twitter. You can go back to Twitter in 2 Lines Club. Even you can see the recent post. You will get to know about, majorly we are discussing about Bank Nifty. Majorly. Okay. So thank you guys. Let's meet tomorrow. As I see, there are no other queries. See you then. Closing session for everyone. And the recording will be shared within 3.5 hours.
Thank you.
Thank you.